Tonight we are live from Sussex, Portugal and Dallas, Texas. Welcome to Stockbox Premiere. Well, joining us tonight for this Small Caps Making Money special, we have Paul Welch, the CEO of Nostra Tera Oil Gas. That's the ticker NTOG. We're going to be talking about their producing Texas oil assets. Dennis Edmonds, the CEO of Kazera Global, that's KZG on the LSE, where we're talking about their heavy mineral sands operation in Alexander Bay, South Africa. And Nick Tulloch, the CEO of Mendell Helium, about their producing Kansas-based helium assets. The format is to begin with a 10 to 15 minute interview followed by the open Q&A session for about 15 minutes. And this is your chance to put your questions to the director speaking using the live chat on YouTube there, or indeed on X. We will pick up those comments. We'll also keep an eye on some of the groups. If anyone has any questions, just put them in there. We'll keep an eye on them. But the best place is definitely YouTube and X. LinkedIn is streaming as well. I'm not sure if we can pick up the comments, so YouTube and X is the best one to go for. The directors, of course, are bound by market rules, but they will do their best to answer your questions as best that they can. Well, to kick us off tonight, we'll welcome our first guest, so Nick Tulloch from Mendell Helium. Nick, good to be speaking to you again. How are you? You're actually calling from holiday. I think this is the second time you're doing that.
I think it is actually. I think last time we spoke on one of these, I was in Portugal, and I am again. So, but good evening. Good to chat, and I'm looking forward to it.
Yeah, well, thank you very much for taking the time out of your holiday schedule to talk to us tonight. So, you've been quite an active year for the company here. You've made quite a few steps forward in the helium space pretty quickly, really. But before we get into that, could you perhaps just tell us a little bit about the change at the company going from what was effectively, medicinal cannabis to helium? Completely different. We only need a minute on that just to set the scene.
Well, yes, this time last year we were called Voyager Life. We'd built a business in plant-based health and wellness. We moved into helium, or was first moved into helium at the end of June last year when we took an option to acquire M3, which has a series of operating assets in Kansas. We since sold the plant-based health and wellness business. We've renamed ourselves Mendell Helium. So the business is now all about what we do in Kansas and the wells that we have there.
So why did you choose to focus on helium then and helium production? What's that market like?
Well, it probably looks from the outside like quite a pivot, but it was a long-standing plan. And rather ironically, the team who came in alongside me to found Voyager back in the autumn of 2020 had previously, with me and with Paul Mendell and actually Eric Boyle, our chairman, we'd all looked at another helium asset in Kansas, and we'd got quite far down the line. And anyway, it wasn't quite right, and I moved on to set up Voyager, and the team came with me. And then here we are, sort of 4 and a bit years later. We've sort of come back to where we started.
Back
so.
on.
It wasn't sort of quite sort of out of left field as perhaps it might have appeared, and it's an area that we've had a lot of interest in. But you said it yourself; it's all about production. I'd say that with any natural resource, it's fascinating what you can do, but until you actually take it out of the ground, until you can sell it, you haven't really achieved your business plan. And the beauty, I think, of what we have in Kansas is we have access to infrastructure, and we are able to produce and therefore sell what we find.
Yeah. Is it fair to say you saw more upside on helium? I'm not going to say exploration, helium production effectively, and more, better value for investors.
I think it's better suited to the UK public markets. The UK's got a very strong small cap natural resources following, and when Voyager began, cannabis, CBD was very much in vogue. I'm really proud of everything we achieved there, but it was just not suited to the public markets. And the right thing to do was to sell it on, which is what we've done. We've given it a new home. Hopefully there'll be a bit of upside for our shareholders going forward. But to use the company that we have to focus on something different, and that's helium. And helium itself has also had a certain element of fashion. We're not the only helium company listed in London, but I often say we are the only helium company selling helium. We are taking it out of the ground every day. We are selling it every day, and so small quantities at the moment. But that's the start, and we've got some wells coming online that could really change the company quite significantly.
Yeah, we're going to dig into that in a lot of detail in a bit. First of all, Nick, Kansas. Why Kansas, and why those assets in particular? Is it special for helium?
It is. So Kansas is home to part of the Hugoton gas field, which is one of the oldest gas fields in the US. It is certainly prospective for helium, and it has been for quite some time. And it's by far and away the easiest place I've operated in the United States. Very benign operating environment, very easy to deal with the state. Those of you who've looked at maps, completely flat, good weather conditions, so a great place to operate in.
Excellent, excellent. Well, thank you for that. So, one of the more notable early developments was your farming with Scout Energy at the Hugoton gas field. So, could you tell us a little bit about the Hugoton gas field just to begin with? Then we'll focus on your asset, which is Rost.
Yeah, the Hugoton has been in production for over 90 years. It's if you looked at it on a map, it's like a backwards Italy. It's like a boot but facing the other way, and it runs through Kansas, Oklahoma, and into Texas. I mean, we're obviously at the top end. Conventionally, in any large gas field, you drill in the center. This is the area that's most prospective for gas. We've done it slightly differently, and we're focused on what we call the transition zone, where the gas zones start to dip down below the water table. And again, conventionally, don't drill where there's water. The water will stop the gas coming out. But what we've proved is that you can dewater the wells, and when the wells are dewatered, you can produce a very successful well. And that's really where our partnership with Scout came in. Scout are not necessarily a household name in the UK, but over in the US, they are a very well-known onshore oil and gas business. In Kansas, or our part of Kansas, in the southwestern corner, they are the single biggest operator and run the main helium production plant or gas production plant called Jayhawk. So partnering with them is a huge part of our strategy in the Hugoton.
Okay, I know that's very important as well. And you said before they quite like dealing with the British guy. These kind of yeah, Americans like dealing with the British guy doing something a bit different. And you've got quite a good partnership there, where you've actually got first right of refusal, haven't you, on a vast area of land there to go for helium. We did a special feature on that. So you've got, is it 5 in production at the moment there?
We have five wells that currently produce.
Yeah,
So the flagship well in the Hugoton is the Nilsson well, which was
yeah.
the subject of a very large frack. They're all on Scout land. Under slightly different arrangements. The big farm out agreement that we put in place back in the autumn of last year relates to new wells, but not the existing wells. But you are right. I think when this sort of strange British guy with sort of pointy shoes and a funny accent turned up in the Scout office in Dallas, it probably did. It did make them sort of sit up and think, what on earth's he on about, and what does he want to work with us for? So yeah, we've formed a good relationship, and it's been a promising start over in that part of Kansas for us.
Good, good. And your focus now is on Ross. Do you plan to look back at the Hugoton in the future?
Yeah, we absolutely do. So we operate in two regions, both in the southwest part of Kansas. One is the Hugoton, which I spoke about a moment ago, and the second is Fort Dodge. So if you're into your westerns, Fort Dodge sits just outside of Dodge City, so get out of Dodge. Um, we have one well there, which we're currently working to bring into production. And this is pretty special. This is a well that's been tested on several occasions at being prospective for in excess of 5% helium. It's also a very high pressure well. Like what we do in the Hugoton, it's wet, it will need dewatering. And what we've been doing of late is recompleting a disposal well, and that's been a huge success, so that we can take the water out of Rost and essentially put it back into the ground sort of 300 yards away in our Broby disposal well.
Yeah.
Rost, I think, is far and away the most exciting part of what we have at the moment. I'm not belittling the Hugoton. I mean, the Hugoton is a fascinating and very valuable long-term opportunity. But Rost is a well that could produce, as a 5% helium, very high pressure, and we think very conservatively could cover all of our operating expenses, all of our overheads, simply out of that one well. So drill Rost, produce Rost, and then carry on and produce other wells in the area. That's the near-term strategy for Mendell Helium.
And that drilling of that saltwater disposal well, so that's to dispose of the water that comes up when you're starting to produce from the helium from the Rost well. There's expected to be a fair bit of water that comes up with that. And that drilling, well, not drilling, that opening up of that existing Broby disposal well, that actually went much better than you expected, didn't it? I think you were able to get access to a reservoir that had more space in it at a higher level, and you're quite comfortable putting the water into that.
Exactly right. If you're dealing with a gas well that's got water in it, then the water has to go somewhere. You can't just spread it around on the surface. It has to be taken somewhere or permitted by the state. So your two options are you can truck it, and there'll be a per barrel cost of trucking it to a location, or you can have a disposal well where you put it back into the ground. The volume of water we think we're going to produce in Rost is just way more than trucks could cope with. We wouldn't be able to get enough trucks that are parked outside the well site in order to dispose of the water. So the smart move was to have a disposal well. And I always felt from the outset of this process, the single biggest risk for us was the disposal well, because
Right.
if you can't get rid of the water, how will you get the gas out of Rost? So as you say, we've had a huge success with Broby. We had a rather sort of an emotional day about 2 weeks ago where the first zone we tested actually put water back at us. So that didn't work. 6 hours later, we moved the packer one stage down, tested the second zone, and it took water like a sponge. So absolutely terrific. But what that means, and what you were alluding to, is we didn't have to go any further down. So going further down is time, and it's also money. So the Broby well was a big success, but it was also completed faster and more cheaply than it could have been. And we were able to use that saving, or that notional saving, to buy basically a better quality pump. And I say Rost is all about pumping the water, so having a good quality pump is absolutely critical.
And you've now got to get the permit to dispose, but I think you've said before that really is quite straightforward. Are there any, I mean, just confirm that, and are there any other hurdles in regulatory terms that you've got to overcome?
The permit is straightforward. I mentioned earlier about enjoying working in Kansas. We were able to phone up the relevant person in the State Department and talk to him about what was required for the well. He's confirmed over the phone there is no issue. So we've put in our application. It's a 30-day process, but what we've been told by Kansas is by the state of Kansas is there is no problem. So we're very, very confident that the well will be permitted. As I say, it is taking water like a sponge, taking far more water than we're going to need for Rost. Meaning, in time, potentially the well could be used for the Broby well, that is, could be used for other production wells too. So no, we're very confident on that. In terms of other regulations, yes, there's a series of permits, but again, I go back to what I say. Kansas is a real delight to operate in, a very benign operating environment for oil and gas companies, and we've had no issues and don't expect any issues on that either.
Okay, good. Now, I did notice recently, I think on social media, Mendell were posting some, I think some videos, or there was certainly something that was showing the gas was flowing very well with not much water content. So, I mean, you said earlier that you thought the biggest risk was the entering of that disposal well, so not necessarily what is going to come out of the well. So I'm interested to understand that a bit more, and what the early signs here that you're getting from the Rost well.
Yeah, I know the video you mean. There's a sort of a tap with a bucket and quite a lot of gas hissing out of it. The purpose of that is to demonstrate that even before we've dewatered Rost, there is gas coming out. Now, you would expect that if you have a reservoir of gas and then a body of water sitting above it, the water will seal the gas and you'll get very, very little gas coming out. The fact that when we open up the well and that there is gas coming out of Rost proves to us what we already know. We know that Rost is a very high pressure well, and we therefore believe that gas will come out at a very substantial flow rate. The fact that we're seeing that, or you can hear it on the video, the fact you can hear it and sort of see the water sort of spitting out of the tap, just proves the pressure that we're dealing with. And that's what it's all about. It's about the helium concentration. We know that's more than 5%, and it's about the pressure within the reservoir, and that'll produce the flow rate. So early signs, very, very good. I say it was a really good week that week. Actually, Broby went better than expected. We've already seen gas coming out of the Rost well. So ticks in the box all round in terms of what we're looking to achieve.
So the pressure you talk about, is that really important then? Because does the pump not encourage the helium to come up as well?
The pump will remove the water.
The pump's for the water, right?
So
okay.
you can, I mean, there's a variety of different things to do. Yes, you can sort of suck the gas out of the ground, but if the gas is rising up under its own pressure, and being drawn in from a wider reservoir, we would expect to have a greater volume of gas and produce a greater volume of gas.
Okay.
So you absolutely want to have downhole or reservoir pressure, and that is very much what we've got. I mean, all the measurements have demonstrated that, and that little video, I mean, it was taken quite late at night. It was just after the pump had been installed. It was taken quite late at night, and it's just a very sort of quick sort of 15-second illustration of what Ross can do. And bear in mind, there are several hundred feet of water sitting above the gas reservoir, and you still or saw or heard that gas coming out. So that's that's what's got the team so excited. I'm actually back out to Kansas next week, so I'll sort of see the next phase of the construction going on. But yeah, it's looking good. It's looking really good.
And that gas coming up, that means that there's pressure there, which is only a good thing. And then what you
Yes.
would look, the next stage of work would look like, what, taking that first level of helium off and then getting to the water? Would you, do you know what the next sort of steps look like?
Do you know, there is a theory on site, and this is totally unproven. There's a theory on site that actually the helium will have risen to the top of the gas mix. So what we're seeing come off at the moment is maybe sort of higher in helium than the overall reservoir. So there's even a sort of tongue-in-cheek idea of, well, look, can you capture the gas that comes off first, and can you sell that as a as a sort of semi-concentrated helium mix? I don't know. That's not going to define the company. That's just a bit of fun. But in terms of what we have, we have, say, a high pressure well, we have gas production, and the next step is to harness that gas. So we have a PSA on site that can purify the gas. Ultimately, it could purify the gas to 99.999%. We need to just see how the PSA runs and see whether it's sensible to take it to that level of purity, or to maybe take it to sort of 40 or 50%, and then truck the mix for final purification elsewhere. We have a number of people interested in taking the helium from us. Scout are one. We've announced that previously, but the Kansas community is not that big, and people are interested. This Rost well, with its high helium and high pressure, this has got people quite interested, and there are other helium processors who've expressed enthusiasm for taking the helium from us. So we're a few weeks away from sort of starting our own sort of mini price war, but it's quite nice to be wanted. And if you're a small company listed in London and you're operating in Kansas, and people are phoning you saying, we're interested in what you're doing, you start to feel that you're beginning to to create some ripples in the water.
And just before we go into that a bit more, you're fully funded to get Rost online and functioning.
We are. We raised money in early April. We actually had a shareholder come in quite late as well, so we raised a tiny bit more at the start of May. But that funding does two things. It gets Rost into production, which is what we've been talking about for the last couple of minutes. It also enables us to explore the possibility of moving to AIM. We're on Aquis at the moment. Our peer group, our helium peer group, are for the most part all AIM listed. And what I might say tongue-in-cheek, what we have that they don't is we have helium production. But in fairness, what they have that we don't is they have more liquidity in their shares. And so moving on to AIM is a key part of our strategy as well. So that's sort of the twin process we're operating. So I sort of spend half my day doing the interesting stuff of looking at what we're doing on Rost, and half my day looking at the audit and the legal diligence on the AIM process. But that's our objective for the coming months.
Okay. And I think you previously said as well that Rost would be capable of covering all of Mendell's overhead, even at a conservative valuation. So does this still remain the case?
Yeah, it does. We're not an expensive company to run. We tend to work mostly with consultants. We don't have a huge headcount. But even that aside, Rost itself, on some fairly conservative assumptions, could easily produce more than $100,000 a month of revenue. Now, bear in mind, this is a well that we have tested at 2,900 MCF a day, and the assumptions that I was using to get to $100,000 are under a tenth of that. So that kind of gives you an element of, I suppose, first of all, my conservatism. It's not my style to be making rash promises, but also the enormous potential that the Rost well has. So yes, that one single well could cover all of our costs, our salaries, our overheads, our advisor costs, and give us that springboard to go on and do more. And that's clearly the objective. If Rost goes as we think it will, then the next step is Rost number 2, Rost number 3, and so on. So this is, again, I feel like I'm sort of talking away from the Hugoton. I don't mean to. I think the Hugoton is a very, very interesting opportunity for Mendell Helium. But I suppose the current excitement, or the near-term excitement, is at Rost. And if you have a well like Rost, it's, I don't want to say it's a once-in-a-lifetime opportunity, but one of our engineers did say to me it's the best development opportunity he's ever seen. So this is something that deserves to be focused on, deserves to be brought into production, and it very easily could become the making of this company.
And you say what, 1/10 of the production would cover costs?
So no, 1/10 of its maximum production. So on
Okay.
the original test, Rost was shown capable of producing 2,900 MCF a day, and to get to the $100,000 of revenue, I was only using 250 MCF a day, so less than
Okay.
a tenth of the maximum.
Okay.
The end result of Rost is probably going to be dictated by the capacity of the offtake. So if we're running the helium through a PSA, for example, the PSA is rated at 800 MCF a day. So
Okay.
so there's a there's a ceiling, but
Okay.
also you have to bear in mind that you don't want to run things to their full capacity 24/7. I mean, you wouldn't drive your car at 100 miles an hour 24/7. You give it a little bit of a rest. Same with the PSA, and there will be some downtime. So again, we are naturally conservative, we're naturally cautious, but even at those very small numbers, and hopefully I've demonstrated that 250 MCF is really a fraction of what this well has the
Yeah.
potential to do. Even at that low fraction, we can still cover all of our cost and then some.
That's really good to hear. So would your hope to be to cover all of your costs, so that make all of the overheads, all of the corporate costs, everything to do with that, AIM listings, lawyers, all that stuff that costs a lot of money to keep a listed company going, have all that covered, and have some money left over to reinvest into new wells?
That is actually what our projections are showing. And I know that sounds like fantasy. I mean, who gets one well that covers all of the cost? But actually, that's what Rost can do, and it can do it at that low fraction of production as well. So that's very much the intention. Yeah, there are some variables, of course. The helium price, for example. But I mentioned before, we have more than one party interested in taking the helium. We have a well that we believe is capable of producing a volume that could probably challenge the PSA. Nice problem to have. But above all, we've dealt with the water, and that was the area that would have been, I think, the hardest one to manage. If that disposal well had not succeeded, if we couldn't take the water off and dispose of it economically, then we have a very different prospect with Rost. But actually, as you observed, we can take the water off. We can dispose of it very effectively 300 yards away, and we're able to do so at one of the higher zones. So, in many ways, Broby could not have gone much better.
Good. Well, just before we go to questions, I have another question to ask you here. So I think it was back earlier in the year you talked about different ways you could fund. You'd had interest from investors, different ways you could fund either other wells in the Hugoton area, but also Ross 2, Ross 3, etc. But I mean, do you expect to call on them, or do you expect to reduce your reliance on external funding as your revenues grow?
I think it's quite flattering to be asked. It's like going to a dance and someone wants to dance with you. It's quite nice to be asked. As recently as last week, someone offered us some money to help us
Right.
develop the Rost area. This is quite common in the US. In the UK, we invest in shares. We take a direct stake in an overall business. In the US, it's not at all uncommon for people to take interest in wells or interest in projects. And you often talk about eighths. I'll take an eighth, or I'll take 2/8 of a well. I mentioned Kansas is quite a small community. What we did in the Hugoton, and I wouldn't really go into detail on the Hugoton, but what we did in the Hugoton by dewatering Nilsson and making that one of the best producing wells in the Hugoton got people interested, and we got third parties invested directly into Nilsson. And the same is happening with Rost. People are interested in what we're doing. So, as a listed company, I mentioned we're looking to move to AIM. Convention would have it that we would raise money in the equity markets. I mean, that's what the capital markets are for. But there is that additional avenue that we have where people would be interested in investing directly in our wells. Now, we need to think about whether that makes sense. We need to think about even whether we need the money at all. But again, it's nice to be asked, and it's nice to know that
Yeah.
that's an opportunity going forward.
Well, it's a nice thing to have, isn't it? Than people perhaps buying an eighth, as you say, of a well. You can structure it how you like. From the corporate point of view, it's definitely an interesting prospect. Sort of take part an eighth of a producing asset there. Are you able to talk about? Because obviously Roswell's not producing at the moment, but we've talked about what could come off of that. In terms of revenues at the moment, are they? I don't know what you can say about them, or are they just sort of they're covering their costs in Hugoton, and it's just a small change thing?
I mean, it's smallish. I mean, what I can say is that we have 5 wells in the Hugoton that are in production. they're all connected to Scout's gathering system, meaning that there is a pipe from the wellhead that goes into the gathering system that is operated by Scout, and from there it goes into Jayhawk where it's processed, and we would receive payments for helium, potentially methane, and also NGLs as well. But it's helium really that has the substantially all of the value that we receive. We don't have to do an awful lot, as long as we keep the well running, so long as we don't put water into the gathering system. A meter will tell Scout how much volume we put through the gathering system, and we will get paid at the end of the month. So we are earning money, we are
Right.
receiving revenue. We're not profitable, as you can probably tell. We're spending time, money, effort on Ross. I mean, that's the focus. But it's quite nice to show that we've proven what we can do over in the Hugoton, and we will come back to the Hugoton at some point. I mean, this is not sort of us sort of moving east to Dodge City permanently. This is the opportunity in the near term, but we'll come back to the Hugoton, and we are producing helium from 5 wells. That will continue for the foreseeable future, but Rost can and should be able to dwarf all of the 5 that we have in the Hugoton. It's a higher pressure well, but most importantly, it's much higher helium composition. Typical Hugoton wells run at sort of 0.6 to 0.8% helium. Now, I know that sounds very small, but given the value of helium and the fact that we are connected into a gathering system, makes that extremely economic for us. But Rost at 5.1%, it's a totally different opportunity altogether.
Well, I think you mentioned to me, I think on the special feature we did, which is really good. I would encourage people to watch that. It's half an hour, real deep dive on the area. And I think you said that the Hugoton is your pension funds, it's your multi-decade opportunity, whereas the Rost is the maybe slightly more risky, but certainly much more upside, as you've just said here, that will really kickstart. So, I mean, if you were to sum up your overall vision for Mendell Helium, what would it be?
Do you know, you've probably given a pretty good summary already. I think every business needs a blend of different opportunities, and the wonderful thing about the Hugoton is there is so much data. I mean, there are decades, literally decades worth of data on the Hugoton, right across the different aspects of the field. And what we know from that data is that these wells last for decades. The wells that we have in the Hugoton, could very easily be, well, very probably be outlasting me and sort of still producing when my children become adults. There's not so much data in Fort Dodge, so I wouldn't want to start saying these wells will last for decades. But what we do know is that the production is much higher, the payback is much faster, and it's the sizzle, it's the excitement on the story. And the vision is not just Rost plus the Hugoton. The vision is many Rosts, expand that Fort Dodge region, build out on what we've proven. The first well is always the hardest, but we've got that disposal well. We've got a well that you saw on the video on on social media is producing gas. So we've done the hard bit. If we can continue to roll out more wells in that area, and if they're all similar or similar characteristics to Rost, we have a really extraordinary company here.
Good. Well, thank you, Nick. Thank you. And it's good to hear that people are on the ground who really know their stuff are already expressing interest in Rost and similar. So that must give a bit of confidence there.
That's the best part of it. I think if people who see these things every day, if they're the ones expressing interest, if they're the ones making positive comments, that is an enormous validation. It's one thing for me to go out and say this looks pretty good, but if a guy who's worked in Kansas all his life says, this is the best development opportunity I've ever seen, you write that down and you remember it, because that's that's a pretty powerful statement.
Well, thank you, Nick. I can see there's just maybe 2 or 3 questions that have come in. We are on time, but I do see that our next guest isn't here yet, so we may as well just take a few minutes just to go over a couple of these questions that we've got. So the first one here: does Nick have a peer comparison we can review, and what is his? Well, I've asked you for the long-term vision, but peer comparison.
I mean, the peer comparison is probably best to look at the other listed companies in London that are involved in helium. So you have Helix, you have Mosman, you have Helium One, you have Pulsar, you have Georgina. They all have interesting prospects, and it's not necessary for me to do a sort of straight comparison. I said earlier we're producing helium. They're still in development. They do have the liquidity that we don't. And they have some interesting aspects to the business, but our plan is all about infrastructure. For us, helium is about getting it, well, about any resource is about getting it to market. But for us, helium is all about infrastructure. Anyone who's bought a helium balloon at a fair and let it go, you can see just how difficult this gas is to capture. But if you have an infrastructure that says you can attach a pipe from your wellhead to a gathering system, you take out all of the risk, you take out all of the drama, and it becomes so much lower cost. And that's maybe our biggest single differentiating factor.
Okay, good. Following the positive raise, MDH highlighted the potential for moving. Oh yeah, you've talked about that, so that's well on the way. The moving this into AIM.
Yeah, it's well underway. I spend every day looking at audits and legal due diligence. I can absolutely assure investors we are in progress. These things do take time. It's a lengthy process with advisors, but a bit like Rost and Broby, we are at least where I thought we'd be at this point.
Good.
Some things running slightly ahead, some things running slightly behind, but overall, we're in a very good place.
Good. With production growing, can we expect to see some more director purchases?
Well, potentially. We're all very invested. None of the board are taking a salary. We've all agreed to take no salary until we get to AIM. So we're putting our money, or we're putting our time where our mouth is, and saying to investors that we think it's important we get to AIM, and as a result, we will, I suppose, bet our remuneration on it. And until that day of admission, no one on the board is going to take a salary.
Right. Okay. Good to hear. And finally, I saw a question pop up here. Let me just find it. We'll just finish off with it because it is sort of topical at the moment with what's going on. So you mentioned this about using some of the methane to run a generator to mine Bitcoin. We're seeing a lot of movement in that space, particularly in London at the moment. I don't know. It's probably slightly early days, and maybe it was just a thing you threw out there. But
no,
what's the reality?
we've spent a bit of time on this. So
Okay.
some of our wells in the Hugoton have got a very high methane content, and the methane will go straight into the gathering system. That's not the case at Rost. There's a much smaller methane content, but essentially it's a waste product. I mean, here in the UK, where natural gas is a key component in many of our lives, that's not necessarily the case over in the US, and the pricing's a whole lot lower. We are not, I believe, going to find it easy to get that methane to market. So we can find a way of using it on site. If there's a way of stripping it from the helium, which obviously gets sold into the market, and we can use that methane to generate a crypto mining operation, well, why not? And for those people who've seen videos of Rost, it's literally 30 yards off a main road. We've got 3-phase power. There's telegraph poles going sort of across the field like spaghetti. So it's very well connected. And one of the challenges on Bitcoin or crypto mining is you need a connection, and we have that. We have that at Rost. So if we can use that product, that methane waste product, to create some value, then we absolutely will. What I do want to say though is this will be a very small part of the value of Rost. This will be like a bit of icing on the cake. Rost is going to be about the sale of helium, but I'm sort of fiercely Scottish. I hate waste, and if we can find a way of using a waste product to generate a little bit of money, and as you say, it's very topical. Why not? On our modelling, we get payback a little over a year, so it's quite a good investment if we can find a way of stripping that methane off. So why not?
Maybe you could look to return Bitcoin to shareholders. I don't know. Don't know how feasible it is. Just an idea I'm throwing out.
I mean, it's the fashion, isn't it? I mean, we should be holding all of our money in a Bitcoin treasury,
Yeah.
or maybe we just mine it. Perhaps we'll produce it for other people. But it's I guess it sort of shows the culture of our business, where we manage our costs carefully. We generate a return where we can, and this is a little bit of sort of off the wall thinking, but I think it merits a bit more thinking. And if we can make it work, well, look, it's quite a fun add-on, and it will be an add-on.
Excellent. Well, thank you very much, Nick. Thank you for your time. So if you can hang around for an hour, you go off air and we can come back and have a round table. But thanks very much. That really shows where we are, so I can let you go. Thank you, Nick. So I'll bring in our next guest here. So, of course, it's Dennis Edmonds from Kazera Global. Dennis, good to be speaking to you. How are you?
Hello, Mark. Good to see you. I'm very well, thank you.
Yeah, good to be speaking to you. Welcome onto the show. It's your first time on this. So, I mean, I think first of all, could you perhaps just take us through heavy mineral sands, or HMS as they're sometimes referred to, what they are, what they're used for, and why they're worth producing now?
Okay, heavy mineral sands is a generic term, covers a whole range of different minerals. In our case, it covers essentially ilmenite, zircon, rutile, and garnet. Mostly between, in our case, between ilmenite and garnet. And it's used. It's essentially a commodity. It's used in the production of paints. Ilmenite in particular is used to make things much whiter. So it's got a strong commercial usage in a market which is as big as the paint market or the whitening market. It's also used in all kinds of other products, including ceramics. So
Okay.
it's a usable, daily used commodity.
And it's and from your heavy mineral sands, it's more the ilmenite and the garnet that you're after.
Yeah, the ilmenite and the garnet are the two biggest proponents or parts of it. The zircon is a significant part because zircon has got a much higher value than either garnet or ilmenite. So it's not to be disregarded, but it
Okay.
absolutely, yeah.
Okay. And the ilmenite is what's used in paint. Garnet is used in it's abrasives, isn't it?
Garnet and abrasive. It's largely used in things like water cuttings as an abrasive to cut through and to create very, very fine edged cuts. And it's used in things like sandpaper as well.
Sure. Okay. Okay. So the market then for well both of those ilmenite and garnet, what's it looking like? Is it as volatile as different commodities, or is it fairly steady and predictable?
No, that's the nice thing about it is that it's fairly predictable.
Okay.
It's a product which is used in lots of different applications to do the same thing, and it's in demand, and it would appear that world supplies are decreasing. So yeah.
Okay. So okay. So and what sort of expertise do you and the team have working in this space? I know you've been working with Kazera for quite a while.
Almost 5 years now. Yeah.
Hmm.
It, we haven't been producing heavy mineral sands until fairly recently.
Yep.
Some of the team have experience in the past of producing heavy mineral sands, but it's such a simple operation. We're essentially digging sand out the beach, taking off the silica, and then splitting out the valuable parts and the non-valuable parts. It's not a chemical process. It's all done with seawater and gravity. So it's an incredibly environmentally friendly process, and it's a very simple process.
Okay, okay. You're digging up the beach. Yeah, it does sound pretty simple. Yeah, I mean, and this premiere that we're doing tonight is all about small caps making money, and that's of course what you're doing as well. You've got into production. You are selling product effectively. So this is from I think it was the first sale of 10,000 tons from the Valviscop project there. So could you perhaps just tell us a little bit about the asset, but also what makes the project so good?
Mark, in a word, the purity of the sand. We have
Okay.
on the beach the purest sand deposit of any I know of in the world. And as I said a
Right.
moment ago, this is not my area of expertise, but I have spoken to a lot of experts who have all been absolutely blown away by what we've got in terms
Right.
of the purity of the sand.
So that's the sand, particularly in the Alexander Bay area, that's just well world class, as you say.
Yes, absolutely.
And is there a lot of
Absolutely.
competition in this space then for heavy mineral sands, or are you a bit of a first mover?
Competition is probably the wrong word. There's a lot of demand, and we have people knocking on our door all the time to put deals together or to offer various deals to us. So it's not so much competition as a lot of demand, and we have a very pure sand which we can produce at a much lower production cost than we believe any of our competitors can come close to.
Right. Okay. And at the moment, it's in production. It's constantly running, is it?
Correct.
Right. Okay. And I think is it diamond you have as almost a byproduct?
It's weird. Yeah, the diamonds are gemstone quality diamonds, and in the process of mining the heavy mineral sands, we need to extract because the whole area is a diamond mining area. So we need to extract any diamonds that might be in the sand or the gravel that we're extracting.
Yeah.
So almost as a byproduct, we also have a very nice revenue stream coming out of gemstone quality diamonds.
Okay, yeah. And on the diamonds at the moment, I think the latest was that's being stockpiled because it's very obviously diamonds very strictly controlled there, and you're reliant on the operator in the area on Alex Core. So what's going on with that at the minute? Are they just being sort of stockpiled and kept in a secure area until you can work out with Alex Core any kind of payment for them?
Things have moved on a lot over the last few months, really, with Alex Core. Alex Core are doing a great job in terms of helping us. They've been incredibly helpful as the owner of the land on which we're operating, or the owner of the rights on the land on which we're operating. So they've been very, very helpful there. And what we're doing at the moment is, as you correctly say, keeping the diamond gravel to one side with a view to processing it. It all gets sold by Alex Core. So the whole sales process is controlled by Alex Core. But yeah, there's a big stockpile waiting to go there.
And can we speculate on the value of that or not really?
Yeah, it's really hard because there are diamonds and you've got to separate out the diamonds from the gravel. But we're very confident that we have something there which is going to be of major interest to our shareholders when we're able to put it through and to sell it.
Okay, and would you say that element is more like a bonus or like the icing on the cake? The main revenue is going to come from the heavy mineral sands, or could the diamonds really be something significant?
No, I think it'll always be a bonus or icing on the cake.
Okay.
The heavy mineral sands, as I say, really all we've got to do with the heavy mineral sands is to take out rocks and stones and sand, and we then have a product. Part of those rocks and stones that we're taking out include diamonds or diamond gravel.
Yeah.
So they're a little bit of a byproduct, but a very, very interesting byproduct.
Okay. So just going back to the heavy mineral sands and that first sale, so that's an agreement you've got, an offtake with Fujax. So I mean, can you tell us a bit about this agreement, how it's going to work, and how long it's lasting for?
Yeah, so Fujax's role is a combination of sorting out the logistics, finding buyers, end buyers, and helping to manage the process. And how the deal works is that on us extracting the heavy mineral sands, that gets assayed on site. They pay us a fee of 80% of the value on site. They then sell the product. And once the product is sold, we get the balance. Now, if the price has gone up or the purity is greater than we'd anticipated, we make more money. And that's kind of where we are driving the business at the moment.
Okay. And this is this the agreement for an initial 10,000 and then look to extend, or where are you at with it?
The agreement is for initial 100,000 tons.
100,000, right? Okay. At the moment, where are you on the sort of timeline of that? How much have you produced? Or can you not say?
Yeah, roughly about 20,000 tons.
Okay.
So we're producing what we anticipated producing,
Okay.
and yeah, things are going well. It's a good relationship. They have very good connections. They have lots of experience in the logistics side. The biggest cost for us is moving our product from Alexander Bay, which is 850 kilometers from Cape Town, down to a harbor, and then moving it on to China or India or wherever the purchaser might be. And that is their experience and expertise. So that's where they really come into the whole thing, is finding the best price. We share the profit between us, and the point is that it's in both our interests to get the very best price.
Absolutely. And can you sort of disclose that at the moment, or is that something you'll have to be RNS in terms of what you've managed to invoice, what sort of cash you've got coming in for the sales?
I think the cash coming in from sales ultimately will be something which will be RNS and will be part of our accounts. At this stage, on the basis that it is very early days, it would be reckless to be
Yeah, it's
making too
very
much
early
out of it.
days.
But
Yeah.
but having said that, I'm very positive in terms of where we are. The costs of the operation in South Africa are more than being covered. So I'm incredibly positive about where we are right now.
Okay, so all costs are covered. The production's going well. You've done around about 20,000 of around about 100 of 100,000. Is there any way investors can do their own calculations? Look at the price of ilmenite. I don't know. Can you get a quote on that? I don't know.
Yeah, the price of ilmenite is quoted. It obviously depends on the purity. That's one of the
Sure.
things we're working on.
Yeah,
We
and that's going
again,
on.
because transport is such an expensive part of the whole operation. The more pure we can make our product, the more
Sure.
profitable it becomes. But
Okay.
to do that, it's not a chemical process. It's not a complicated process. It's removing the sand and making it purer. So it's
Sure.
all a question at the moment. Our focus right now is on removing the sand.
Okay. Good. So you've got it going. You're in the optimizing process. You're selling stuff already, and it's going to be assayed and looked at. You're just getting going, aren't you? Really, with revenue.
Yeah, as I say, well, as I think you said, the first 10,000 tons we
Yeah.
sold last month. So yeah, it's
Perfect.
relatively early days, but
Yeah.
again, it's bearing in mind that we got the mining permit for the heavy mineral sands in October 2022, so 2.5, not even 2.5 years ago. We're having gone from absolutely nothing to now being in production. I think the guys on the ground in South Africa have done an incredible job.
Good. And just beyond the agreement with Fujak, would you look to secure additional offtake partners, or would your preference be to extend with Fujak's?
I think it depends on how things work out, Mark.
Okay.
At the moment, the way things are going with Fujax, it would be brilliant if we could extend that with them. As I say, they manage the logistics side of it, and if they can drive down the costs of transport, um, that on its own is as almost as useful as producing
Sure.
the basic
Okay.
product.
Okay. And also beyond Valviscop, then it was I think you've applied for a mining license as well on an adjacent beach, the Per Devley, and I think that's considerably larger than Valviscop.
Yeah, well, you're absolutely right. It's powder flare, and it's a 3,000 hectare site, whereas our current site is only 5 hectares. Of
Hmm.
that 3,000 hectares, we have earmarked 168 hectares for immediate operations once the mining right is granted.
Okay.
And so, that on its own is 34 times bigger than what we're operating now.
Okay.
And our belief is that the quality of the sands in the Paderflay area, in the earmark area in particular, are even higher than what we are currently seeing in Wolfers Corp. So, an enormously exciting proposition.
Good, excellent. Well, I just want to go to some questions because we are sort of in that window now. We've got about 10 minutes, and I do see some investor questions coming in, so I can just put them up for you, Dennis. You can answer what you can answer. So, what is the capacity of the market to absorb the potentially huge amount of production of ilmenite and garnet from Paardevlei?
We will always be a relatively small producer compared to some of the world's big producers. The difference between us and the big producers is the purity of the sand which we are working with. So we don't need an enormously big operation because the purity is so high. So we will always be a highly profitable niche operation,
Sure.
and making some significant contributions to the market, but we're not going to be market leaders or market dominators because it's always we're always relatively small. What we will be is very profitable.
Okay, okay. Thank you, Dennis. So another question here. The business seems to be going very well. Why then did you sell 10 million shares today? Wouldn't it be better to wait for a higher share price?
Yeah, that's a very good question. Essentially, what I had was a number of options which were expiring, and I needed to sell those to exercise to pay for the options. So I needed to pay for the option exercise. But you've also got to remember, we are in the UK, and you've also got to pay as you earn. So there's a 40% surcharge on top of any shares you might sell. Yeah, I would have much preferred to have not had to do that, but circumstances dictate, and that's what I had to do. So, yeah, disappointed from lots of perspectives, but I didn't have very much choice in terms of doing it.
Sometimes you don't get a choice in this matter. Okay, thank you. Another couple of questions here. So, when do you expect the Perdivale license will be issued?
I can't make predictions about what the DMR, the Department of Mining, might be doing or not doing. What I can say is we have an enormous amount of local support. There were various local groups which were opposed to the idea. They are now very much on side. We have made some alterations to our plan to meet some of their objections. So we are very, very confident that the decision is fairly imminent.
Okay. Another one here. We saw a picture of the chairman with a churn or can of processed diamonds last year. Any reason why they have not proceeded to Alex Core for sale?
Yeah, lots of different things that have gone on, but what we showed was not a picture of processed diamonds, but a picture of the can in which the very highly concentrated diamonds are collected in.
Okay.
That process is still continuing. There have been various things we've needed to sort out with Alex Core, which I don't really want to go into at the moment. But suffice to say that where we are with Alex Core right now is very, very positive, and we would expect some interesting news in regard to diamonds, in the pretty near future.
Okay, good to hear. Thank you, Dennis. Just on the Perdivale, how come no one else has snapped it up if it's pretty prospective?
It's not that easy, Mark.
It's not that easy. Okay.
Because when you're mining the heavy mineral sands, you are mining diamonds because they're in the same areas, and the diamond rights are controlled by Alex Core, and Alex Core logically doesn't want to just allow anybody to come in and mine diamonds. The diamond miners themselves aren't interested in heavy mineral sands because they are very difficult to process when you are trying to extract diamonds, because they have a higher specific gravity than diamonds actually have. So the traditional ways of separating diamond gravel from sand don't work for the diamond miners. So it's been a combination of taking two different challenges and making something out of those there, which actually means that we end up making money out of both sides of it, both the heavy mineral sands and the diamonds. That's been the challenge.
Okay, so it's almost like you have to prove yourself a little bit, that you're sort of good operators, trustworthy people, to be able to get the opportunity even to do this.
Yeah, Alex Core doesn't allow people onto the site unless they've passed police clearances and a number of health checks and all the rest of things. So they control their site because diamonds are easy to steal.
Yeah,
they control their site very, very, very strictly.
Okay. Well, if there's any more questions, people watching, please do type them in on the comments. We'll pick them up. Just something that I've thought of here on Perdivale. Once you get that permit granted, is it a lot of work to get it into production?
Mark, I think that's the whole beauty of this operation. The fact that we've got Volfus Corp up and running and we're working on producing a purer product means that when we get the license for Perdivale, all we're doing is duplicating on a larger scale what we've already done. So it's a really, really almost plug and play extension of what we're doing. So it's incredibly low risk, high return future for Kazera.
Excellent. Okay, good. Another question just popped in. I see it's not on the heavy mineral sands, but it's on the arbitration that I think was sorted, wasn't it, just a few weeks ago there? Is it any closer to securing the monies that are owed?
No, I'm not going to talk too much about that because we have various strategies in place. But absolutely right, we've won the arbitration. We've been awarded a substantial amount of money of just over $12 million with interest at 20%. And we are taking the necessary steps to recover as much of that as we possibly can, or all of it.
Right. Okay. So it's just it's done and it's ongoing, and it'll clear when it clears.
Yeah, I think discussing the strategy too openly would not be in anybody's interest. Certainly not in our interest.
Yeah. Okay. Okay. So I mean, when it comes to Kazera at the moment, then, and how you feel, because I remember it, and you say it was 5 years ago, and I think we met in London probably 4 years ago. I think it was 2021. I can't remember, but I remember meeting you at the O2 and first interviewing you, and we were talking about your desire to get the company into production here. So it's now happened. You've got revenue coming in. So where are you seeing the company now throughout the rest of this year? We're pretty much halfway through the year. So what's the next 6 months looking like?
I think we will see good levels of profitability, and we will see some major growth in terms of the development of the powdered flake 2A license area. There is an enormous amount, I believe, which will happen certainly within the next year. This will be a completely different company. It's a nice company now. It's the subsidiary is paying its own way and it's making good money. Going forward, that there will be greatly enhanced. Just even if it was only, don't forget, powdered flake is 34 times bigger. Even if it was only 10 times bigger in terms of profitability, that changes Kazera from being what it is now into a very, very different company.
Absolutely. And would you see that as like a significant shift in revenue, or would you see the company perhaps just going up step ladder style revenue?
No, I think it'll be a major shift. There will be a few steps, because we'll probably set up one plant to deal with 2A, and then probably add in another plant after that. But if the first plant is doing, I don't know, whatever it is, 5 times, 10 times as much as the current plant, and the next one does the same thing, there's an enormous amount of very, very fast growth.
Excellent. Good. Well, thank you very much, Dennis. We're just about a minute early, but that's good. We can let you go. If you can hang around for half an hour, you won't be on screen. But if you could hang around and have a discussion with the other CEOs about all things getting into revenue, a small cap London listed mining companies getting into revenue, that would be great. But for now, I can let you go. And I can bring in our final guest. Of course, it's Paul Welch from Nostra Tera Oil and Gas. Welcome, Paul, calling from West Texas, Dallas. Sorry, I said from Dallas. Yeah. Yep. How are you?
I'm good, thanks. I'm really good. Thanks for having me.
No, good to be speaking. Always good to be catching up. So, of course, you've got your assets in West Texas. You've got a new oil well that you're planning to spud. I think it was the end of summer. Was it the autumn about that time, I think?
End of summer, yeah. Beginning of autumn, end of summer. That's the plan.
End of summer, yeah. Excellent. But perhaps just to start us off, people who are new to this company, just introduce us to the company and its strategy. The whole theme of this live stream is small caps making money, and you're definitely doing that. You're definitely
okay, well, I'm glad to be part of that, thankfully. Okay, so NTOG is an onshore Texas oil and gas producer, primarily oil, with our assets in East Texas and West Texas. The primary asset that we have is in East Texas. It's called Pine Mills. It's a field that the company purchased about 9 years ago. It's a shallow field with good quality reservoirs. It's a conventional producer, so it has long life, low decline wells. I mean, the field was discovered in 1945, and it's still producing today. And so we're producing about 150 barrels a day in total. Our operating costs are very low because we're in Texas. We have shallow reservoirs, and then we have access to any number of good quality service companies, so we can get things done relatively cheaply, which is one of the reasons we're still making money at these prices. Our net back at $75 a barrel, which is a long way off now, is about $50 a barrel. So our operating costs are about $25. At current prices, we can probably just scale that back by $15. So our net backs are probably closer to $35 to $40 a barrel now, when they were higher before when the oil prices were up. But we're in good shape. We did a change in management just about a year ago this week. So we significantly changed the company up a year ago. And so from that point forward, we've just been focused on generating revenue, paying back our debts, and putting money into projects that can generate a return. And so that's been kind of the theme for the last year.
Well, the last year was certainly a big significant change for the company, not just on the management side, but as you say, changing some of the ways you operate there. Could you just perhaps go over the immediate changes that the company made with cost cutting and reviewing of the current assets that have been in the portfolio of the company for a long time?
Yeah. Well, I think the issue with Pine Mills has been in the portfolio for quite some time. The prior team was looking at growing, and they were looking at growing kind of globally rather than growing locally. So when I came on board, we had a kind of a very scattergun kind of approach to what was happening. And so what we did immediately was just look at all what's making money, what's not, what is making money, what can make money, what's not making money. Things that were making money, we kept and invested in. The things that were making money, we sold or put on the sale bin. We haven't sold everything, but we sold assets that weren't core or strategic or felt that we could get there. But something like Pine Mills, which was the primary asset, we went out and raised money and put a lot of money into that field, and we've essentially doubled the production over the last year in that field through our investment program. So because the field had been picked up 9 years ago and then used essentially as a cash source to put into other opportunities, when we came on board, there were essentially 10 wells that were idle, that were capable of being returned to production, but just hadn't been invested in. Subsequently, we've taken 9 of those and returned them to production, and taken the field and essentially doubled it. We were producing just over 100 barrels a day last week. We peaked production at 140 barrels a day, which is where we should be. But weather and power and other issues have worked against us. So right now we're just above 100 barrels a day, and we are targeting 140 by the end of the summer. So that's our plan.
Okay.
And
just on that point, sorry,
yep.
Paul.
Yep.
Yeah, I know 140 was your target. So you say what it's weather and what affects
Yeah.
the production?
Yeah, so it's 100. It was so we made 144 barrels a day. So we hit our target for a couple of days, which isn't great. We need to hit our target every day. And the issue we've had in the spring has just been weather. It's what I describe as a weather power issue. The field is operated by electricity, so all the pumping units, vertical pumps are all electricity driven. And we've had in this last 2 months, so in April and May, we've had twice the number of storms and twice the amount of rain that we have in a typical over 30-year period. So, we've been up and down due to these thunderstorms coming through, and that's then things will flood and shut some wells in. So that's been really kind of nipping at us hard. The new wells, or the wells that we returned to production, a few of those we raised up above the floodplain, so they're sitting up on. I think we showed some pictures of them. They're sitting up on perches above the water, not a problem. But some aren't there, and then it's a place called Pine Mills, which there are lots of pine trees. It's a pretty beautiful place, but when the storms come through, they knock the pine trees down, knock limbs down, and have issues with our power source. So we put more money into essentially running new lines. We just ran a new, some lines we buried, other lines we just trimmed the trees up. So it's been a constant source of trouble for us over the last 2 months. But we're getting our heads around it now, and I think moving forward, we don't expect to see this kind of level of storms for the next 6-7 months. But we've had in the last 2 months, they've really caused us some problems. But we identified that, and so the wells that we worked on are fine, and the wells that we hadn't worked on obviously suffered a little bit. So those are the ones that we have to get after. Now, the other issue too is when oil prices were higher at $75 a barrel, returning things to production quickly was something we did. Now, as prices drift down, below 60 and 50, some of the marginal wells that are making 2-3 barrels a day, we're not going to rush out to put those back on because it doesn't really pay out for a period of time. I mean, I think the thing that we had impressed upon all the investors that were involved early with us was that everything we did was going to pay out within a year. And mostly that's true. The oil prices come off about $20 a barrel, or 20%, sorry, about $15 a barrel. So that has lengthened that time, but everything payout times were between 1 month and 13 months, and with the average being 6. And so, we might be slightly more than that, maybe 7 months, but everything we've done has to pay out within a year, and so that's what we're focused on. So as oil prices drop and wells that are making 2 to 3 barrels a day come off, we'll probably be slow to put those back on until prices come back up.
Okay, and that's just to save cost, effectively.
Yeah, I mean, again, we want to, we have other places to put our money that probably has a better return than bringing a marginal well back on. And so, we'll use it to, drill the next Falk well, which I'm sure we'll talk about.
Sure.
But I mean, those are better uses for the cash than putting a marginal well back on in a low price environment.
But are you happy with the workover that you've done and the production of the
weather?
Yeah,
for sure.
You're not using weather as an excuse. It is genuinely the weather that's
No, I mean, you guys can check the records. Again, we hit it when we made the number that we were expecting. 144 is the peak. But we've just had a tough time keeping things up and running with all the weather we've experienced. So, as these things dry out and as we move forward, it's going to be, we can check the weather and see if that's good. We've had double the amount of rain and double the number of storms for the last 2 months, not just 1 month. So it's been a consistent pattern, but it should be, like today is beautiful. So, as things dry out, we'll put things back on and it should be fine. A lot of times, we have 6 feet of water, and so the well's sitting up above, above the water, but our guys and pickup trucks can't get down there and service it in case it goes down. So it's been a little bit of a challenge, but it's just one of those things. It's something that we'll manage and we'll get through it.
Okay, good. And just in terms of your experience, because I know you've been a director of the company for quite a while, but your experience and the team's experience at Nostra Tera working in this industry, but also perhaps this West Texas area specifically.
Right. So we changed that. So again, a year ago is when we had the big change. So I was on the board for the 2 years prior to that. And my experience has been, I'm a petroleum engineer by background. I have, almost 40 years of experience. Went to the Colorado School of Mines, University of Texas, and then went to work for Shell for 15 years, came out and started to work for smaller companies like Hunt Oil, Pioneer Natural Resources, and a few others. And then, got involved with the smaller AIM companies, which are challenging and a lot of fun to work with. And so I have a lot of experience, again, on the production side. I'm a petroleum engineer. When I came on board, we brought someone else with me, which was one of our biggest investors now, a guy by the name of Jim Newman. Jim and I know each other for a long time. Jim comes from the service sector. He's worked onshore Texas, Permian, East Texas for his entire career. He's also from the service side of the business, so he knows what it takes to, get things up and running, what we should be paying for things. He had a number of service businesses and a plugging company, so he's very familiar with old well bores, how to get the most out of them, and how to do it profitably. So again, we changed up the team. Steve Staley, our chairman, remains. I became the CEO, and then Jim came on as an NED, and that's the entire board and team at the moment. We just kept it very small, kept our costs low, and just focused on what we knew and what we could bring to this to make things, improve things, and get things back on production, which is where we needed to be to start making oil and increasing production. So that was the team change, and we think it was a very positive thing for the company.
Good. Yeah. Thank you, Paul, for that. So just going back to phase 2, the workover that you've been doing here. How are we complete on that?
We're done. We're finished with them. Yep. So we finished with them about 2 weeks ago now. We got the last power line in. Everything has been up and running, but as I said, as those wells are up and running, some others have come off, so we haven't seen a complete spike up. But when we brought the last well on, we made just over 140 barrels a day before the next set of storms hit us. So we're clearly capable of doing it. We just need to get everything back up and running. But we identified 10 wells when I first came on board. We put together programs for 9. We funded those, and all those wells are now up and running and on production. So, a lot of cases, these wells haven't been produced in something like 7 or 8 years, and so they're up and running. We're making anywhere between, in the low case, probably 5 barrels a day, and in the high case, 15 to 20 in some cases, depending on the day, from these wells. So it's been a good addition to the production. Like I said, we doubled from where we started. Every barrel that we make is a profit center for us because our costs are fixed. All the facilities are in place. They've been in place for 50 years. So each incremental barrel is just something that we bring the cash registers for. So we're really focused on getting that incremental barrel across the line. And again, with the cost thing, also because we divested ourselves of most of the opportunities that weren't making us money, we lowered our operating costs corporately by 25%. We raised production initially by 40%, so that allowed us to increase our netback by almost 50%. So we increased the profit per barrel significantly from the time we started, which has really been helpful.
Well, it's good to hear that phase 2 is finished. So in an ideal world, that's 140 barrels of oil per day,
Correct.
effectively.
Yeah.
Okay. So that's good. What does that? I don't know what you can say on this publicly, but can you talk about what that covers? Because I know you've said you're profitable both at the operational and at the corporate level. So I mean, does the production from these wells cover the cost?
Yeah, it covers everything. It covers the whole. Because we have some debt that I inherited, and we have our operating costs. So we're profitable at both the operating and corporate level at the moment. We'd like to be more profitable. We have a little more price help. We would certainly be up and generating a lot more cash. But at the moment, we're I think thankfully we started this process a year ago, and so the drop in prices obviously hasn't helped our cash flow. But we're in a position now that we can absorb it and not be where we started this process, which when I came on board in May of last year, we were losing like $50,000 a month. So now, in a good month, we're making 20 to 30. So it's been a significant turnaround from where we started, and had the oil prices stayed up, we would have been much higher than that. But it's been a big change in the way we operate and the amount of cash we generate, and little help on the prices would certainly make a big difference because our costs are essentially fixed. And so, as prices increase or as production increases, that flows straight to the bottom line. That's what we've been focused on.
So you say what, 20 to 30,000 US a month, roughly?
Yeah, that's what we're making now. I mean, I have to check the numbers, but it depends on the oil price. But that's what we're doing. That's what we're looking at.
Okay, so that covers the cost. I guess there's still some overheads and things that probably aren't covered in that. Fees on the listing.
Everything. That's everything. We're covered everything.
Directors' fees as well.
Covered. Okay. That's our debt. That's our overhead. That's our operating costs. Everything's covered. We are truly a profitable business. Yeah.
You are truly right. Okay, that's fantastic. That's great to hear. It's good to hear you. Only worth £1 million on the stock market, and most mining companies are.
That's a problem. That is an issue.
Are losing money, not making money. Okay, so I'll get onto that in a moment. So now that that's done, then with Pine Mills, does that mean that your focus now is on Falk and that drilling of that well that you agreed with your partner to do earlier? Well,
right. So we've been focused on the Falk area for a while. Falk is it's kind of a misnomer to call it a different part of the field. Falk is essentially the southwest corner of the field, and so it's an area that's been there since the field was discovered in 1949. But until a 3D seismic program was shot around 2018, no one knew, the extent of this fault patterns. And there's an area down there that has essentially fault separated from the rest of the field. That 2 wells, well, actually in total now, the 5 wells have been drilled down there, 3 by offset competitors and 2 by ourselves. And those 2 wells came in 2022, producing at 120 barrels a day. Okay. 120 barrels a day and no water, right? The average Pine Mills well makes between 6 and 10 barrels a day and has a water cut of between 80 and 90%. Again, Falk is very different. In the Falk area, we're producing clean, dry oil, 120 barrels a day. Our operating costs are less than $5 a barrel. So this is a significant, increase in our cash flow when these wells come on. Now, those wells came on, 2022, produced, at the field limit of 120 barrels a day, flat out for a year, then declined, and now they have stabilized the 2 wells at 100 barrels a day in total. So we're making 100 barrels a day from those 2 wells, and it's been flat since May of last year. And that gives us confidence that the area to the north of where these wells are located is a larger section of the reservoir, and that's the area in which we've mapped not only 1 but 2 potential locations. We're going to drill 1 this year, and hopefully we'll drill a second one the following year. Or, if prices stay low, why can't we drill it this year? Because, the demand for casing for rigs and everything has come off with this decrease in pricing, decrease in oil pricing, and that has softened up the market for workover rigs and for drilling rigs. And so potentially we can get these wells drilled at a discount to where we originally drilled them. That hasn't, we haven't firmed that up yet. That's something that's a work in progress, but it's something to look forward to. Now, the other part of the story too is what we haven't mentioned to anyone up to this point is that there's a tremendous amount of waterflood potential down in the Falcon area. So at the moment, we're just producing a primary. You're not putting any water in the ground. So as these wells, as the natural reservoir pressure declines, the wells decline. Once they get to a certain point, then we're going to implement a secondary recovery program. And like the rest of the Pine Mills field, we'll start increasing the pressure in the reservoir, which will increase the rate of flow of these wells. And so we'll be back to producing, hopefully at the field limit at some point in the future once then we implement that. Now, that's also something we discussed with not only our partner, but our offset operators as well to see if we can implement that flood. And that's an ongoing discussion that we're having to see, how quickly we can implement that. So the Falc area, pays, pays dividends multiple ways. And again, 2025 is when we're going to start to reap benefits of the next set of rewards from the Falc area in our view.
Okay. Well, thank you, Paul. I do see some questions coming in. I do want to get on to them in a moment, but
Sure.
just before we do that, if you could just answer this. What sort of production numbers would you expect from the new well, and when? What are the next steps to actually get it online once it's been drilled?
Okay, so the well is going to come in around 120 barrels a day.
Okay.
I think 124 is the field limit, so that's what we expect it to come in at. We have a third of that well, right? So our net will be 40 barrels a day from that. That's what we expect. The next steps are we pick the location. Now we have to go out and stake the location, build it, and get a permit for the well, and then go out and tender for the rig and for all the consumables. We've put off the tendering for the rig and the consumables just to see where things are going to move from a pricing perspective. Things we see to be trending down, demand is off. A lot of companies have pulled back on their 2025 programs, and we think that will benefit us as we move through 2025 in the form of lower costs for both services and for some of the equipment. The flip side of that is that we have some tariffs that have been implemented on some steel and aluminum products that aren't helpful. But overall, we're seeing a change in price of about 10% on tubulars. So we don't think it'll be that big of a deal. So that's what we have to do. We have to get the permit. We have to stake the location, build a location, determine access, that sort of thing. On a map, it's easy to pick out where the location is, but then when you get on the surface, you have landowners you have to deal with, you have access roads, you have a big rig you have to get in there. So all that is happening at the moment. Now, the important part that I think everybody needs to know is that we are a 1/3 owner of this, and we are not the operator. So we have, through our own technical work and our own stories, and the things that we've generated, we've convinced the operator that this is a good thing to do. Now it's down to the operator to execute it. Now, obviously, we're there to help them. They're very good partners to us. They did a great job on the first 2 wells. But again, they're a private company. They're going to do things in their own time horizon. And at the moment, the timelines I'm giving you are the things that we've agreed with them. Now, it may change if we have a hiccup with, securing a rig or thing like that. But it is going to be a 2025 spud. We'd like to do it at the end of the summer, put the well on in the 4th quarter, and start producing it before year end. So that's our target, and that's what we've been shooting for. But again, that target is about a quarter behind where we originally expected it to be, because our partner just had to get themselves up to speed. They had a very different view of the subsurface than we did. We did a lot of technical work. We had a number of meetings with them, showed them what we thought, and we got them on board. And now they're completely on board, and they're going to run. They're going to run with the ball that essentially we handed them. And so
Good. Okay.
So that's where we are. So, ideally we end the year with a production rate between 170 and 200 barrels a day. That's what we're looking at, and that will require us to get Falc up and running.
Right, 170 to 200 by the end of the year with new Falc.
With Falc, correct. Yeah.
With Falc, okay.
Yeah.
Okay, so that's okay. So that's 100. Is that 100 from the Pine Mills plus 120? Is it, or no?
Yeah, we need about 120 to 130 Pine Mills and another 40 from Falc.
Oh, 40. Sorry, from Okay.
Yeah.
Oh yeah, because you've got a third. Sorry, I'm forgetting
Right.
a third. Of course.
And then we'll get, again, assuming that we get everything else back up and running, we should be closer. But I don't want to
Yeah.
overpromise here. We need to deliver on this. So
Yeah, that's fine. That's fine. Okay, I'm going to just bring in some questions, Paul, because I do see there's quite a few people that are interested, which is obviously a good thing.
Good.
People
Yes.
like the story. Okay, so what is the production barrels of oil split between Pine Mills, West Texas, and Falkwell? And previously, CEO has stated the company makes money above $25 a barrel. So why are some wells not worth it as producers?
Okay, so we produce about our operating costs are around $25 a barrel for sure. Where we have an issue is like we have a very marginal wells making 2 to 3 barrels a day. Again, it's the capital required to put that well back on production. Let's say we have a casing leak, or you have to bring a workover rig in and pull the tubing and rods and replace them. So it's just a matter of cost. How much is going to cost us to return it? If the well just is down because of power, and we just have to flip the switch and turn it back on, or rewire something, we do that. But it's just a matter of cost when you get to these marginal wells. Now, any well that's above 5 to 6 barrels a day, we'll put on almost straight away. But it's just these marginal wells, when they get below 5 barrels a day, you're just okay. Is it worth it? What's it going to cost us? And we have to look at all those things, because, as I said, we're targeting payouts in under a year. So anything that's longer than a year, we're probably not.
Yeah.
And so and again, it'll depend on water cut too. So some of these wells, they may make 2 to 3 barrels a day, but produce 200 to 300 barrels a day of fluid. The fluid has to be treated and disposed of, and that has some power cost to it. So it's a variety of things that we look at when we're looking to turn wells back on. But that's where we are. So as far as numbers go, we should be about 120 to 130 in Pine Mills, 40 from Falk, and then we'll get 10 to 15 from West Texas. That's kind of what we're looking at the moment.
Okay, another question here. What is the plan to get to the stated 5,000 barrels of oil target within 3 to 5 years? And why does the company not report production and profits every 3 months? On quarterly basis, yeah.
Right. Okay. So for us to get to 5,000 barrels a day, which is the target, we're going to need to do an acquisition and need to do some development. So ideally for us, what we like to do is get involved with something that is similar to like a Pine Mills type of opportunity, where it's a mature field, has been invested in for quite some time. Maybe the company ran into some debt issues or something, take that over, and then go back in and kind of do a redevelopment. That's what it'll take. Now, we can't do that with our existing asset portfolio. We're going to need to add to it. So it's, these are opportunities we're going to look at. And so, it'll be a period of years, that won't happen overnight. Just because we couldn't raise that much capital and deploy it that quickly. So that's the time horizon we're looking at. As far as reporting on a quarterly basis, we're on AIM. We're required to report on a semi-annual basis. We'll continue to do that. We try to put out something at least monthly. As far as putting out things quarterly, obviously that's something we can look at. It'll depend on what's happening, things we'll do. But we internally we do everything on a monthly basis. So to change it to a quarterly reporting thing, we can do that. But then you get audited, unaudited, these type of things. So it's there's more to it than just putting out production numbers. But as far as internally what we do, we look at everything on a monthly basis. So
well, monthly reporting is good, I think, in the first instance anyway. As you get things going, it'd be nice to keep investors up to date on what's going on a monthly basis. Right, let's have a look at this one. Why does the company not pursue more creative finance, such as have oil companies like Europa Oil and Gas, Zephyr Energy, and Cirque Energy? Too many placings are destroying shareholder value and the share price.
Well, again, we're a small entity, and so you look at those companies. Somebody like Serica. Serica is a very large company. I knew the former CEO quite well. We're just a very small opportunity. So to do creative things requires, I think, bigger opportunities. We're not opposed to that. But again, something like the bigger thing we're working on now is Falk. Falk is something that we're taking on with a partner. We're paying a third. The partner's paying 2/3. We're both benefiting from it. So we are, to a certain extent, doing something along those lines. As far as creative goes, obviously I'm open to ideas, but they have to be scalable to the type of opportunity we're looking at. So, you're bringing on 6 to 10 barrels a day. If you're not bringing on 100 to 200, the way in which you can do those type of opportunities is slightly different. So again, we're open to ideas. I don't want to shut anything down, but at the moment, the opportunity set is really focused on what we can do internally, and not essentially with a partner beyond something like FOW. Right?
Okay. I know you've got your drawdown as well that you could maybe utilize to drill FOW. Could you? When there's a
So that's a good point. So when I came on board, that up until now, that facility has been maxed out, and so we've been just trying to ensure that we don't run afoul of keeping that where it is. As I think we've reported in January of this year, we renegotiated that facility for another 3 years at very competitive rates, and so we're going to have our first redetermination of that facility this month. Sorry, in June next month. And so at that point, we'll see. So we have two competing factors there. We have increased our production on our reserves by a certain amount, and we've seen prices come down by a certain amount. So it's the let's call it the yin and the yang of that. Have we increased it to the point where there's going to be more headroom available, or will the price deck they're using essentially take all of that away? And that's what we're going to determine in June. In our view, we've increased production by more than 50%. Prices have come off by about 20%. So we should be generating some headroom in that facility that could be used for other things. Now, also, we would like to do everything from cash flow. We don't really want to use any investor equity or any more debt to do things. Cash flow is our preference, but those things are going to be available. Hopefully, this facility will increase as in line with the production numbers that we've realized, and so we'll see. But it'll be a combination of the two. So we're always looking for opportunities to do that, to look for creative ways to spread our capital around. But up until today, literally today, there's been no availability in that facility. It's been maxed out.
Do you perhaps think that the low valuation of Nostra Terra is potentially a fear of funding? Where that's going to come from?
It could be. I mean, it could be. I think in the past, the company prior to my involvement had raised a lot of money and not really delivered on what they said were going to do. We've raised money since I've been here, and we put it all into the ground, and we've seen the production, increase. Now prices have come off, which hasn't helped, but we've done what we said. We need to continue to do that, and until investors are convinced that we're delivering on what we intend to do, I think there's going to be some skepticism. It's going to keep the price low. So, my job and the job of the board is to, reiterate the fact that we're putting money into the ground. We're looking for good opportunities, and these opportunities are delivering value to shareholders. And until people see that, I think they're going to be skeptical, and they should be. And so, it's really up to me to deliver on what we've said. And I think we're doing that. The production's up. The values are up. We'll see with the increased facility what kind of headroom we get, but it's just one of those things we got to watch the space. Had the prices not dropped off, I think we'd be in a much better position. But because of all the work we did in the past, even though prices have dropped, we're still in a good position because we're still profitable. I mean, like I said, prior to May of last year, we were losing between $40,000 and $50,000 a month, which wasn't great. Now we're making money, so it's a significantly different company. But that needs time to bake in and generate and pass through to the store to the investor base. All they've seen is our 3 raises, but those raises were needed to essentially get these wells on production. And so, so I understand people's concern, but I think we're in a very good position now to grow it going forward.
Okay. I can see there's about 3, possibly 4, I think, in one of the Telegram groups. So I'll just go through them. We can take a few extra minutes. Why has the company not employed a chief financial officer with oil and gas experience? It's clear that there's a potential knowledge gap in current management. I don't know if that's a dig, Paul, or not, but anyway, the CFO.
Yeah, I mean, it's a matter of cost. So we have experienced people on a contract basis that are working behind the scenes that don't wind their way into our presentations and into our public disclosures, but we're operating in Texas. There are a lot of very experienced people in Texas, and there are people behind the scenes that are filling that role for us on a part-time basis. And so when the company grows, we get to the point where we can afford a full-time CFO that has industry experience. We'll add them to the mix, or we'll just promote them up to the board to do that. But at the moment, we need to keep our costs low and essentially share that experience around other opportunities and other, with people just share that cost, because at the moment we can't afford it. So
Right.
so they are there. They're just kind of on a part-time basis.
Okay. So something to bring in later. Okay, so it's a
Yep.
cost-saving measure. Okay. Okay. Last question. This is all from the same investor here. The company's raised 1.4 million in the last 3 raises, but only increased production by about 50 barrels of oil per day. So it cost nearly 30,000 per barrel of oil. That's too high. So is that right? First of all, and well, what's your comment on that?
So we've sustained a 50 barrel a day increase. We've got it up by 100 barrels a day. We just need to continue that. So I mean, again, it's a matter of getting through this weather window, and then getting the resilience in the system to allow us to produce this 140 barrels a day that we need. That we're looking to do based on the investments we've made. So it's going to take some time. We needed to also pay back some people that were owed money when we came on board. So not every single penny went to the ground. Some of it went to people that were owed money in the past. And also we have a $4 million facility that needs to get paid each month. So a big chunk of the revenue that we generate each month goes towards paying the debt. And again, the debt that was there when I came on board doesn't really benefit me per se, because that money has been spent. Now it's just a cost for us. So not everything we raised went straight into the ground. Some of it went to pay back some past payables, and then some of it is used to pay the current interest on the debt that we have. But I think as we move through the remainder of the year, that price per barrel will drop as the production continues to increase.
Okay. Thank you. So I did see one question that came in on the Nostra Terra Telegram group. Again, I don't know what you can say on this, but the question is,
Okay.
Are there targets for production to increase over the next 6, 12, 18 months? It would be helpful to know what the company thinks is achievable. The previous CEO was happy with 100 to 140 barrels of oil per day for years. Paul says he wants more. So, yeah, targets end of this year, end of next year.
Okay, so we gave me the target at the end of this year. It's going to be, between 170 and 200. That's what we're looking at. Beyond that, I think we've given you the kind of the full cycle target, which is to get to 5,000. Between there and those 2 points, there's a lot of open space. We haven't done our budget for next year yet, so we don't know where we're targeting. But let's think about some scenarios here. FALC comes in, we have the FALC 3, potentially a FALC 4. That's going to be another 40 barrels a day, and then we start implementing a water flood. That could be another 100 barrels a day on top of that. So, organically, we're looking at another 150 barrels a day. So ideally, we'd like to, add another 150 barrels a day in 2026. It'll depend on the success of FALC 1, if there is FALC 3, if there's another FALC follow-up, and then the implementation of the water flood. So those are the things that we can see in the near term. Beyond that, I think it's going to take some opportunities, both from recompletions in the field that we're working on at the moment. We don't have any hard numbers on, and also some acquisition potential out there. What we haven't really talked about is these soft prices are not great for our cash flow, but there are opportunities out there where people that haven't been in our position to kind of clean up their story over the last year need to sell. And so we've seen some opportunities that are priced quite competitively. And those are the type of things that we potentially progress if we stay in this kind of lower price oil environment where we are at the moment. So some acquisitions would certainly help and add to the production base. And just so it's clear to everyone, we're only looking for producing assets that have development upside. So we're focused solely on generating cash from day one of things that we purchase. So that's what we're looking for. So we don't have further targets beyond the end of this year at this point, but obviously we will look to those when we start our forecasting and our budgeting at the end of the summer. So that's really all I can say about that. You've got the end point, you've got the end of the year, and then there's a scaling thing that has to happen between those 2 points, which we're focused on.
And your targets are based on barrels of oil per day rather than profit, for example. That's your metric that you're focusing on. Yeah,
we're focused on. I mean, again, our costs. Well, our costs are relatively fixed. So the more revenue, the more barrels that we can generate, the better for us. So, and then the other thing too is with with a cash target, it implies a certain oil price, and at the moment the oil price is changing so frequently, it's difficult to to pick one. We picked $75, and we were pretty comfortable that was going to be a decent price. But as you can see, we've come well off that. So budgeting next year will probably be closer to 60, and then from that we'll generate a whole slew of targets based on that cash flow. But at the moment, with the way prices are moving around, we're focused more on barrels a day than anything else.
Okay, no, that makes sense. And I don't know if what you can say to this. I just quickly worked something out just based on what you said earlier about what you're sort of making on a monthly basis at 20 to 30,000 US dollars, based on 170, which is what your target is for the end of the year once you've drilled Falk 3. And I know these are conservative values. Obviously, that's based on the current oil price. So that gives me a 400,000-ish number. And that would be sort of like a profit. I don't know if that is
for profit for the end of the year. I think we should be better than that. I mean, again, I can't predict the oil price, but the thing with the Falk barrels is that our operating costs are less than $5. So the net back on a Falk barrel is significantly higher than the net back on a Pine Mills barrel, and so the numbers will scale based on that metric. So let's just pick a price. The oil price is $60 a barrel. We're probably going to be making $50 a barrel in profit on a Falk barrel, just to put it in perspective. Yeah, so there is upside to that number because of the profitability of the Falk assets, right? And then we have to pay taxes and some OPEX associated. So it's not all 100% profit, but it's a significantly profitable number. That's why the Falk area is really key, because the numbers and the amount of cash we generate from that area is significant compared to Pine Mills. But it's all profitable, which is an important thing.
Just one last question. I know we're getting a little bit late for the roundtable, but it's okay. We won't go over time. But there's a lot of people watching, and I know a big thing with Nostra Tera is you've got Premier Miton, haven't you, as a pretty significant shareholder now. They obviously want a return, so they're very supportive of your of what you're doing. So I think there's like two questions here. I know Gervais sees a lot of value in Nostra Tera because it's basically $1 million market cap company that's profitable now. So I mean, do you have conversations with Gervais about how sort of supportive he is, and does he say anything to you about what he likes about the company, and how can you get that value up to give Gervais a return and shareholders?
Yeah, so I mean, again, I think so. We talked a little bit about how to get the value up. The value up is we have to continue to deliver on our targets. We have to get out there and promote the story, show you we're making money, show you how things are improving, and show you where the funds that we have raised have gone into the ground and generated a return. With regards to Gervais, I think we don't talk individually or daily or anything about what we're doing, but from Gervais, it was an overall plan for the company. Say, look, Gervais, this company needs to improve. These are the opportunities that we see out here. These things pay out within a year. They are very profitable. Our operating costs are very low. We're onshore Texas. We're in a very good environment in which to operate, and so our ability to generate cash here is substantial, and it's that ability to generate cash that I think caught his attention. Now, obviously, I can't speak for Gervais, but those, these are the type of conversations to have. He likes things that pay out quickly, are low cost, and are repeatable. And so we showed up with 10 opportunities, of which we executed 9, and I think that's what he liked. And so as we move forward, we're going to continue to do that. We're going to look for lower cost opportunities that generate cash from day one and allow us to grow the business in an organic basis, as we move through the future. So Gervais has been very supportive. They're an 18% shareholder at the moment. We hope they continue along those lines, and we hope we deliver opportunities to them to allow them to continue to grow their position. We have other stakeholders in there that have, like Jim, one of our board members, is a significant shareholder, and there's other investors there too that have backed us and want to see us grow. So they all like the low cost conventional play that we're doing in East Texas and to a lesser extent in West Texas. But those are the things that we're going to continue to focus on. And then we think that, being successful in delivering more of those opportunities will allow us to increase the share price, and also for Gervais and others to invest more into the company and turn a profit. Excellent.
Thank you very much, Paul. Thank you very much for that. What I'd like to do now is just bring everyone, our other guests. So everyone, you can meet each other. Welcome. You're all,
hey guys.
You're all
good evening.
Making money. Yeah, which
Yeah.
is great.
I guess, sorry, you guys had to listen to me. I didn't, unfortunately, get a chance to listen to you, but
No.
hopefully it was entertaining.
Yeah, no, I think so, and I say all of you are generating revenue, and I want to just focus this sort of discussion time, if I can, just on perhaps strategies that maybe you could share with each other. I don't know, for generating, for scaling what you've got at the minute, which is sort of small scale cash to fund growth. So, in other words, how are you sort of expanding your current cash flow from operations to perhaps reduce reliance on external funding and support the growth? So, I mean, Nick, you've had a bit of a rest. Let's come to you first. What crosses your mind when it comes to scaling that maybe other people could apply to their businesses?
Well, I suppose for us at the moment, our focus is very much on the Rost well over by Dodge City. In terms of scaling, that well sits on a formation that clearly is not just under Rost itself. It extends in several directions. So our scaling is about examining other drilling locations within the same formation. As with a lot of geological formations, sadly for us and for everyone else, it doesn't sort of form perfect squares. You have to follow the geological trends. But the scaling for us is about more wells of the same type in the same area, and building therefore on the success that we've had or are having with Rost.
Right. So almost like rinse repeat sort of thing. Would you say?
Sorry, Mark, you have to repeat that. The internet has gone a bit slow at my end.
Sorry. That's okay. I said almost like a rinse and repeat.
Well, it is, and I know when we were talking earlier, for us it's very much about the dewatering prospect. We know that Rost is wet. We accept that, and we went into it. The success on Rost is going to be about dewatering it, and having found the solution, and the solution for us is the Broby disposal well, and in time there'll be other disposal wells. That, I think, more than anything, points us in the direction of a scalable model in that Fort Dodge area. So we know the gas is there. We've sampled it. We've been able to do tests on the gas coming out, but that water disposal, trucking it is not a solution. As I mentioned, is the volume of water. It's just going to be too much. We couldn't physically park that many trucks outside the wellhead, so it has to be a disposal well. But knowing the formations and knowing the access paths that we've got, that's the ability there, to scale that operation in Fort Dodge, and with helium content that we're so focused on, that gives us the path to what could be very, very significant revenues.
Okay. Well, Dennis, what can you do then? Because of course you are going also for scale as well here. I mean, is it a matter of repeating what you've got going at the moment at a bigger scale, or what else can you do to enhance that scale up? And I think utilize the money well as well, and reinvest it.
Yeah, I think I feel a little bit embarrassed because the amount of expertise and skill that is needed in both of my fellow panelists' operations is enormous compared to the simplicity of ours. We are mining a beach. We're using seawater, which obviously is on the beach, to assist in the process. And we are taking the sand out of the product, and then the rest of the product is either diamonds or a saleable heavy mineral sand. So it is a really simple operation. And in terms of scalability, there is none on the 5 hectares we have now, although that'll be a nice profitable operation on its own. But once we have the mining right over 2A, the scalability is really just a question of doing exactly the same thing on a bigger scale. So it's a really, really simple scale situation.
Okay. And what would you do? I mean, what would you do with the cash that comes in from the current sales? I mean, would you look to just purely reinvest constantly? Would you look to build a pile and maybe return some to shareholders at some point? I mean, what can you do to best utilize that?
The answer is yes. We're an investment company.
Okay.
So and we're an investment company. We're not a bank. So I have no intention of sitting on a great big resource of cash. If we ended up in that situation, we'd be paying it back to shareholders. If we had something which we could positively reinvest it in, that's obviously what we would do, because it comes down to how do we get the best return for our shareholders, and whether that there is returning cash to them or investing it in something else which we believe can give them an even better return. That's the decision that the board needs to take.
Yeah. Okay. Paul, then, in terms of scaling up, I mean, again, maybe it's the same thing. Maybe it's a rinse and repeat. You drill Falk 3, you see how it goes, and you effectively go again.
Yeah, I think in our case, something like a Falk well has an internal rate of return, in excess of like 500%. I mean, it's incredible how well these things return when they hit. In the case of Falk, we have the Falk 3 and the Falk 4, and then, as I said, also we have the upside of implementing a secondary recovery scheme in that part of the field, which hasn't been there. So we can see how we can scale up, from where we are at the moment now, 150 barrels a day, to get up to something like, 150 barrels a day just in that particular area. So, we see the opportunity set there. It just takes time, pricing, a lot of geologic work, and some pricing help would also go a long way. But all the infrastructure is there, all our expertise is there. It's one fault block over from the main part of the field. So we have a clear path. Now we just have to execute it. And I think, I don't know what the rest of the panel members feel, but before we could do that, we had to get a very profitable base business. And so that's what we worked on for the last year, that we have a base business that makes money. And so now we can start to grow that, cash into something else. And before that, when we were losing money each month, it was more about just survival. Now we're about growth. And so that is a change that occurred over the last 12 months. And so that's really been the key. So now we can see our way to growth. Before that was the case. And so it's been a significant change. And again, we're just going to follow the path that we put ourselves on over the last 12 months.
I do think that's a similar theme, maybe particularly with Nick. Build a strong base first and then look to build from there. Yeah.
Agreed. And the other thing too is if you're in decent financial shape, opportunities come your way, because at the moment, the price of oil anyway is down relative to where people were expecting it. And so people that were highly levered, that were trying to grow and do other things in a different price environment, now have to change, what they're thinking about doing. And that then creates opportunities for other people to go and perhaps take a piece of an asset that wasn't core to them, but would be core to us. And then also people are continually, kind of upgrading the portfolio. So something that doesn't really fit well with someone else, may fit well with us. And with the prices down, you can get opportunities that you can, make a decent return on, because the prices aren't going to stay low forever. And these opportunities, will come around. Now, as the prices drop, and the rest of our panelists feel the same way, as the prices drop, our costs also for services drop. And so, it's a good time to invest when you're at a low ebb in the service business, because as prices escalate, it's tough to outrun that margin, because your service providers really can scale quickly and charge you quickly when everyone wants their services. So when prices are down and no one wants the service, that's the time to invest heavily and turn things around. So that's another opportunity we see in this current environment, is that because prices are low, opportunities are there. You have to go after it now. You can't wait. Yeah. You have to be slightly bold in this environment. You can't sit around. You got to go for it.
Good. I like that. Good. The next point I want to just discuss is how can we make mining sexy again? This is actually something I picked up from BHP Billiton. I think it's BHP. That's right, and their Explore program. That's what they want to try and do. Because when you look at companies that are making money, from a purely investment point of view, what is not to like if a company's got cash flow coming in that they can build on, and then indeed look to return that to shareholders? A lot of the money at the moment, I think, is in, Nick, we were talking about it earlier, the crypto, the sort of the Bitcoin, that kind of tech environment. And, I know because you want to perhaps look to use some methane to run a generator to mine some Bitcoin. But what do you think you can do as mining companies here that are making money to, maybe sexy is not the right word, but to attract people to solid investments that are backed against tangible commodities, just like all of you have, that are needed in the world, that are consumed in the world, that, the crypto, it doesn't perhaps have the hype or the sexiness, but it has utility. So, I mean, I don't know, Dennis, first of all, can you make heavy mineral sands sexy, or the business case attractive?
Heavy mineral sands are a commodity, so they're very straightforward, they're very easy, and very logical. I think how it is a sexy operation is that firstly, it's environmentally very friendly. We're taking the sand out and we're putting it back on the beach. We're using seawater to separate it. There are no chemicals. There's no other process involved. So there is absolutely no change to the environment. But I think the really sexy side for us is the fact that we are in a very isolated part of the northwestern part of South Africa. So we're right on the coast in the corner between South Africa and Namibia. The population is very small. There's only about 6,000 people, indigenous people living up there. And the implication we can make in terms of education, health, opportunities for those people is enormous. So I guess it's certainly one of the big drivers for us as a company, is the changes we can make. And it comes out of our profits. So the more profitable we are, the better off, and the more we can do for local people, which is a great place to be.
That is a good angle, actually, Dennis. So is that something that you're doing now, or you would look to scale up and look to tell the market, tell the world what you're doing to make a difference there?
Oh, no, it's very much something we're doing now. So we are in the process at the moment of setting up a trust. And one of the things that is really important to me is not to see a small number of people with very nice cars. What we want to see is the whole population benefiting. So I really want to see things like schools, clinics, sports teams, all those things that opportunities. There are businesses there which need a bit of cash put into them to be regenerated, which will give people a living for the next 100, 200, whatever years. That's the kind of stuff we can do, and that's very much what we're looking at the moment. We've got some really good local partners who are involved in that with us at the moment. So yeah, that's very much the future.
That is a good point, Dennis. Yeah, I'd never thought about that before, but that is actually one good way to make mining, attractive to investors. I mean, I know that you Nick and Paul, you're both in the United States. Perhaps that has its own problems, but perhaps not what we're talking about here in South Africa. But Paul, oil, generally it's not that sexy, is it? So what's the attraction here?
So oil's not that sexy in New York City, maybe, I don't know, but in East Texas, it's very sexy. I can tell you that. West Texas as well. And the reason for that is, one, is that unlike the rest of the world, landowners in this part of the world benefit directly from you producing the mineral on their lease. So, we have, like, I think I've told the story, Mrs. Smitty, who's owned this, his granddaddy owned this lease since the 1930s. She gets 20% of everything we produce, and so she's very friendly to our guys, lets them get through, do what they want. Also, we pay a lot of taxes, and a lot of those taxes go directly to the school system in the areas that we produce. So the quality of the schools in East Texas, given that it's quite a rural area, is excellent compared to other parts of the world that don't have mineral production, that type of thing. So I would say in the part of the world, and I don't know where everyone else is operating, but in the part of the world we're operating in East and West Texas, because of the amount of revenue that we generate and other companies generate, a lot of it goes back directly into the community through people that own the land and also through taxes into the school system. So you have a lot of people that go into the industry that are from these parts of the world. So to them, it's sexy. It'll maybe never be sexy compared to crypto or other things that other parts of the world see. But for the places in which we operate, we are generating a lot of, firstly, good jobs, and secondly, a lot of revenue to the local governments that use it for schools and roads and other thing else. Wood County, we're one of the places that we operate for a while said, their claim to fame is that there are no more dirt roads in Wood County. So every road was paved in Wood County because they've been producing, oil and gas for, literally over 100 years. And so, that's one of their claims to fame. So, people do really appreciate what we do in this part of the world. It just might not be appreciated in other parts of the world, but you get a lot of good technical people, land people, creative people, good students. We pay for a lot of, as you see on TV shows, a lot of Friday night lights, so a lot of football stadiums, a lot of artificial turf, weight rooms. There's a lot of stuff that the revenue that we generate goes to for local people. Again, it's a slightly different dimension from what's happening in Namibia and South Africa, but it's the same principle. People have to participate. People have to benefit from what you're doing. And through that process, it'll become attractive. Maybe not sexy, but it'll become attractive.
Could you look to perhaps market heavier onshore in Texas, and maybe dual listing? I don't know, or market to US investors.
We could do that, but there's, I think what kind of makes us unique is that we are, there's not many. What we like to be is a mid-size, U.S. producer on the AIM market, which makes us unique. There's lots of private and public companies in the U.S. that are doing what we're doing. And there's just not as many on AIM, and so that's what kind of sets us off. Is that we attract a different pool of investors, a different pools of capital. And so, that's why we like being listed on AIM, because it gives us, or listed in London, gives us opportunity to access investors, and they have access to us where perhaps they don't get that every day. And so I don't think that we'd pursue a local U.S. listing, because there's just so much competition for that incremental dollar that I don't think we benefit from it at this point.
Okay. All right. Well, Nick, let's finish off with you then. Helium, of course, there's not many helium plays that we've talked about. But what can you do to attract people to helium investing, or make the proposition? You've got the crypto angle, I suppose. So you are tracking that a little bit.
We have a bit of a crypto angle. I think mining is sexy. I think natural resources is sexy. The London markets for generations have enjoyed investing in natural resources, and the excitement of what may be found and what will come out of the ground and how it'll be produced has always got investors going. And fashions come and go, and just at the moment we're in a bit of a tech fashion. But the history of mining natural resources in the UK is terrific. We're all in production on this panel, and I would argue that actually that is probably the most sexy part of the mining or the natural resources area. When you and I were talking earlier, Mark, I spoke a lot about the Rost well and the hopes and expectations we have for that. And I will be absolutely over the moon if that performs as we think it will. But I will be even more excited if Rost 2 performs well, and even more excited then if Rost 3 performs well. Because going back to your first question, then we've proved the scalability, and then we've proved that we have we've developed a resource. Maybe we're developing a whole new field. If we start to really get ahead of ourselves. So for me, that's the sexy bit, the ability to really scale up what you prove at a small scale. I don't think I can be quite as sort of virtuous as Paul and Dennis. We pay a royalty to our landowners. We work with local contractors as best we can. In fact, predominantly work with local contractors. But where we are in Kansas, I don't think we have quite the impact that maybe the other two companies have in their regions. But nevertheless, we're probably doing our little bit. And as you say, with helium, it's high value. It's in demand. It has no natural substitute at all. So to be able to find helium and produce it and get it to market, I think that's quite sexy. So we're pretty happy with where we are.
Good. I would agree. It's a good note to finish on. I think being a junior mining company in revenue is pretty attractive or sexy on its own, and that's why I'm pleased we've done this theme tonight. I hope more of these premieres can have this sort of theme as more companies look to actually get into to some revenue here in this space. But we're bang on time. Thank you all very much. We've had nearly 400 people watching. Thank you for everyone who's been watching and giving your questions in. As always, we'll always be doing interviews with the guys who've on this show tonight. So do keep an eye on Stockbox. Do send in your questions. We'll be keeping tabs on all the production figures from all these three companies throughout the rest of the year and hopefully beyond. But for tonight, Paul from Nostra Tera, thank you very much. Dennis from Kazera Global and Nick from Mendell Helium, thank you all very much for joining us. And we'll see you next time.
Right.
Look forward to it. Thanks, Mark. Thank you.
Bye-bye.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.